Hello students, how are you all? Are you fine? I, Dr. Lal Babu Jaiswal, Assistant Professor, Faculty of Commerce, Banaras University, Varanasi, Uttar Pradesh, India, is going to present the computation of tax liability under the old tax regime and new tax regime, under the optional tax regime and default tax regime. Dear students, in the previous class, we have discussed about the slab rates and slab amount under the optional tax regime and default tax regime. Dear student, we have also discussed with the help of the two numerical questions how the tax volume is computed and how the marginal relief is also computed. So dear friends, dear student, it is my humble submission before all of you with the help of the today class. It is very important and prominent class. Each and every person, each and every SSC want to compute its tax liability on the proper manner, on the basis of proper manner. But such types of proper manner should be according to the rule, according to the provision, according to the such types of component which are directly help to support the provisions, rules and regulation. So dear friends, now I am going to start today class. The topic of this class is computation of tax liability of individual with the help of the practical problem. The case number 1. Compute the tax liability for the assessment year 2024-25 in the following situation if the assessee does not opt the default tax regime, opt the optional tax regime, opt the old tax regime. First, Mr. A is a resident in India and has income under the head house property rupees 40,000, house property rupees 40,000 and income under the head salary rupees 30,000 and long term capital gains rupees 4,80,000. Second case is presume the above situation the assessee is Mrs. A and she is age of 70 years. So dear students, in first case assessee is Mr. but in case second assessee is Mrs. So how the amount of tax is computed regarding to the assessment year 24-25. So dear friends, dear students, first income from salary 30,000, it is given the question. Income from house property, it is also given 40,000. Income from under the head of business capital gain, long term capital gain 4,80,000. So total of three components will be 5,50,000. So 5,50,000 out of rupees 5,50,000 deduction under 80C to 80U is not given. So then same amount rupees 5,50,000 as a gross total income being total income also. So dear student, in a present slide, now I am going to compute the volume of the tax, volume of the computation of tax liability for the assessment year 24-25. First, tax on long term capital gain, tax long term capital gain rupees 3 lakh at the rate of 20%, section 112 will be 60,000. So how it is computed rupees 3 lakh because up to rupees 2,50,000 no volume of tax is computed, but we can say in the question income from house property rupees 40,000, income from salary rupees 70,000, so 30,000 plus 40,000 is equal to 70,000. Dear students, 70,000. So 2,50,000 no tax up to rupees 2,50,000. So 2,50,000 minus 70,000 is equal to 1,80,000. Up to rupees 1,80,000 no amount of tax. But in this question, long term capital gain is 4 lakh. Long term capital gain is 4,80,000 minus 1,80,000 is equal to 3 lakh. Now it has been come up to rupees 3 lakh. Dear friends, dear students, 3 lakh rupees. How the 3 lakh is computed? We just explain these types of how it is computed. So again, now I am going to explain. Up to rupees 2,50,000 no amount of tax. Okay. Income from house property and income from salary. Total of income from house property and income from salary 70,000. So 2,50,000 minus 70,000 is equal to 1,80,000. 1,80,000. So 1,80,000. So 4,80,000 minus 1,80,000 is equal to 3 lakh. 3 lakh. So up to rupees 3 lakh, no amount. Up to rupees 3 lakh, the amount of tax is at the rate of 20% is equal to 60,000. So 60,000 is computed. Okay. And on rupees 70,000, the total of income from salary and house property, no amount of tax. No amount of tax. So 60,000 plus nil is equal to 60,000. Health and education says at the rate of 4%. At the rate of 4%. Okay. So 60,000 into 4% is equal to 2,400. Dear friends, to 2,400 plus 60,000 is equal to 62,400. 62,400 will be called as the amount of tax liability. So dear friends, we hope you got in the case of the volume of the tax regarding to the Mr. A. Dear students, computation of tax liability regarding to the Mrs. A. In the case of Mrs. A, same computation. How the same computation? Because we can say in this question, Mrs. A is 70 years. So 70 years means up to rupees 3 lakh, no volume of the tax is computed. No volume of the tax is computed. So dear students, 3 lakh minus total of income of salary and house property 70,000 is equal to 2,30,000. So long term capital gain is 4,80,000 minus 2,30,000 is equal to 2,50,000 at the rate of 20%. So 2,50,000 at the rate of 20% is equal to 50,000. So dear friends, the amount of tax on long term capital in this situation when Mrs. A age is 70 years and the income from salary and house property will be 70,000. So then the amount of tax is 50,000 and at the rate of 4% HEC to 2,000 to 50,000 plus 2,000 is equal to 52,000. 52,000 will be the tax liability. 52,000 will be the tax liability. Dear students, with the help of the case number 2, I am going to also discuss Mr. X has a income income as under case number 2. Compute his tax liability for the assessment year 24-25 if he does not opt the optional scheme under section 115 BAC. Does not opt optional tax regime. Does not opt optional tax regime means opt default tax regime. So in this case, income from salary is 5,35,000. Income from house property 2,45,000. Income under the head of business and profession 30,000. Long term capital gain 1,10,000. Long term capital gain 1,10,000. Short term capital gain 25,000. Casual income 55,000. Deduction allowed under section 80C to 80U 25,000. So dear students, with the help of this question under the default tax regime, I am discussing about the volume of the tax which has been already solved in under the next slide, and the slide is, we can say, income from salary 5,35,000. Income under the head of house property 2,45,000. Income under the head of business profession 30,000. Long term capital gain 1,10,000. Short term capital gain 25,000. Casual income uniform loyalty 55,000. Total will be 10 lakhs. Dear student, 10 lakhs and 10 lakhs out of 10 lakhs rupees 25,000 will be deducted if the assessee opt the default tax regime. If the assessee does not opt the default tax regime, then it will be deducted. If the assessee opt the default tax regime, so then 25,000 deduction from 80C to 80U will not be deducted. Dear students, we can calculate the amount of tax liability with the help of the slab rates under the old tax regime, under the optional tax regime. Tax on long term capital gain, we can say tax on long term capital gain at the rate of 20%. So 1,10,000, 20% of 1,10,000 is equal to 22,000. Tax on casual income 30% on 55,000 under section 115 BB 16,500. Tax on normal income rupees 8,10,000 at a slab rate will be computed 74,500. 74,500, how it is computed? We can say in this question, up to rupees 3 lakh, no amount of tax. Next 3 lakh at the rate of 5%, 15,000. Next up to rupees 6 lakh, the amount of tax is 15,000, and 3 lakh, more than 3 lakh rupees 2,10,000, 2,10,000 at the rate of 10%, 10%. So that will be treated as a tax amount of new tax regime. But in this question, the tax is computed computing under the old tax regime. So up to rupees 2,50,000, no. Up to rupees 5 lakh, tax amount 12,500, and rest amount 3,10,000 at the rate of 20%. So 3,10,000 at the rate of 20%, 62,000. 62,000 plus 12,500 is equal to 74,500. Dear students, so 74,500 tax on casual income at the rate of 30% under section 115B BB, and tax on long term capital gain at the rate of 20% under the section 112, rupees 22,000. Total 3 amounts will be included. Total of the 3 amounts will be sum the tax before education cess 1,13,000 and on 1,30,000 tax cess rate 4%. So cess rate 4% will be computed 1,30,000 into 4% is equal to 4,520. That will be 1,17,520. So dear student, this is the tax liability under the old tax regime. Dear student, next, computation of tax liability with the help of case number 3rd. Mr. Jaiswal, age 50 years and a resident in India, has a total income 4 crore 50 lakh, comprising long term capital gain taxable under section 112 of 55 lakh, short term capital gain taxable under section 1111A rupees 65 lakhs and other income rupees 3 crore 30 lakhs. Compute his tax liability for the assessment year 24-25 under the default tax regime and optional tax regime as per the normal provision of the act, assuming that the total income and its components are the same in the both tax regime. So dear students, under the default tax regime, total income is rupees 4 crore 50 lakh, 5 lakh, 4 crore 50 lakh is given, 4 crore 50 lakh given. Tax on long term capital gain amount rupees 55 lakh. So 55 lakh, 20% of 55 lakh, 11 lakhs हो गया, 11 lakh will be computed, and rest amount tax on 15% on short term capital gain, 65 lakhs is short term capital gain, so 15% of 65 lakh, 9,75,000, and rest amount 3 crore 30 lakh. How 3 crore 30 lakh is computed? 4,50,000 minus 55 lakh plus 65,000, 65 lakh, 55 lakh and 65 lakh is equal to 1 crore 20 lakh. 1 crore 20 lakh will be deducted out of 4 crore 50 lakh. So then rest figure will be treated 3 crore 30 lakhs. So 3 crore on 3 crore 30 lakhs, on rupees 3 lakh to 6 lakh, the rate of tax 5%. From 6 lakh to 9 lakh, tax rate of tax 10%. 9 lakh to 12 lakh, the rate of tax is 15%. And 12 lakh to 15 lakh, the rate of tax will be 20%, and rest amount will be computed by the percentage of 30%. The total amount of the tax 96 lakh. So 96 lakh will be included in the amount of tax on short term capital gain and long term capital gain, which have become 1 crore 16 lakh 75,000. 1 crore 16 lakh 75,000. So dear students, surcharge at the rate of surcharge 15%, because the income is rupees 4 crore 50 lakh. So 4 crore 50 lakh, the rate of surcharge will be 15%. So 15% will be computed on rupees 20 lakh 75,000. How the 20 lakh 75,000 is computed? 25 lakh 75,000. This will be computed on the basis of this types of calculation. So surcharge 20 lakh 75,000. 20 lakh 75,000. So then 20 lakh 75,000, 15%, 20 lakh 75, 15%, 3 crore 11 lakh 2,500, and at the rate of 25%, rest amount 96 lakh. Because we know 15% will be computed up to rupees 15% will be computed up to rupees 2 crore to 1 up to rupees the rule is for up to rupees 50 lakh, no amount of surcharge. Up to rupees 1 crore, the rate of surcharge is 10%. Up to rupees 2 crore, the rate of surcharge is 10%. Up to rupees 4 crore, the rate of surcharge will be 15%, and above up to rupees 5 crore, the rate of surcharge 20%, and above the rate of surcharge is 37%. But now it has been decreased up to till rupees till the percentage of 25%. So that will be 25% on the rupee 96 lakh will be computed. That will become 24. That will be computed. 24 lakh will be included as a surcharge in the amount of 3,11,250. So then it will be it has become 27,11,250. It will be included in value of tax, and after it 4% education cess, health and education cess HEC is computed 5,75,450. So tax liability has become 1,49,61,700. Dear students, in the case of when the optional tax regime is adopted by the assessee, so in the case of income rupees 4,50,000, the tax on the long term capital gain 20%, 55 lakh, 11 lakh, and 65 lakh, the rate of tax will be 15%, so 9,75,000. On other income 3 crore 30 lakh, so 3 crore 30 lakh it will be computed according this manner. So then it will become it has become 96,000 is computed and include rupees 1 lakh, 12,500 and 1 lakh. So that has become 97 lakh 12,500. So 97 lakh 12,500 will be included in the rupees of long term capital gain tax and short term capital gain tax, 11 lakh and 9 lakh 75,000 respectively. So that will become 1 crore 17 lakh 87,500, 1 crore 17 lakh 87,500. So then it will be up in this slide the surcharge is computed like the manner. So then it will become rupees 27 lakh 39,375. So then after it health and education cess will be also computed. So then the tax liability will be 1 crore 15 lakh 7,950. So then this is the question. This is the question, and now I am going to dictate the solution of the question with the help of the case number 4. Case number 4 is Mr. B. Mr. B furnishes the following information for the year ended 31st March 2024. Income from textile business, income from house property, lottery winning, speculation business income, income by way of salary, long term capital gain 112. To compute his income, his total income and tax liability under default tax regime under section 115 BAC. So dear students, this question is solved with the solve on at this slide. So we can say salary income 2,70,000 and loss from house property cannot be set up against the income from the salary. The profit and gains of the business and profession, speculation business profit 1 lakh rupees given and 1,35,000 will business loss is set off against the income from speculation business, and rest amount 35,000 will be carried forward for the next year, and long term capital gain is also given in this question 70,000. So then 35,000 business loss is computed deducted out of rupees 70,000 as a long term capital gain. So then rest amount will be 35,000 as a long term capital gain, and then income from winning of lottery rupees 5 lakh to rupees 5 lakh, rupees 35,000 and 2,75,000, 70,000 will be 2,70,000 will be included, and then rest of the amount and total income of the Mr. B 8,05,000. So dear students, it is my humble submission before all of you on this income. The tax liability is computed with the on the basis of this calculation with this slide. So we can say on total income 2,70,000 excluding lottery winning and long term capital gain nil. So on long term capital gain rupees 5,000 at the rate of 20%. How the 5,000 is computed? So it will be balance adjusted basic exemption limit of rupees 30,000 because 2,70,000 total income 2,70,000 is coming with the help of the salary income, or in this case Mr. B opting the default tax regime. Under the default tax regime, the basic exemption limit is rupees 3 lakh. So out of 3 lakh, 2,70,000 is deducted, and rest amount 30,000 is benefited under the long term capital gain. So long term capital gain 35,000 minus 30,000 is equal to 5,000 into 20%. So then come 1,000. तो 1,000 and lottery income का rate of lottery income 30%. तो 5 lakh 30% of 5 lakh 1,50,000. तो then 1,000 and 1,50,000 will be 1,51,000 and 1,51,000. The health and education cess at the rate of 4%. तो 4% 1,57,040 rupees. So dear student, it will become the amount of tax liability. It will become with it tax liability. So dear students, in this class we have discussed the tax liability with the help of the 4 types of case study. So with the help of the 4 types of case study, generally such types of case study directly help to the way where how the tax liability is computed under the default tax regime and under the old tax, under the optional tax regime. So there are to be needed the practice to know the easy way how the tax liability is computed under the computation of tax liability of the individual chapter. So dear students, I hope you got each and every point regarding today's class. If any query or confusion, so without any hesitation you can contact to me. So thanks once again to all of you. I will meet in next class with the next topic, with the help of the next topic, and I will discuss in next class the tax liability assessment of the Hindu undivided family, assessment of the partnership business, AOP, BOI and other chapter. So once again, thanks to all of you for your nice listening cooperation.